Hello, my dear students. I hope you are doing great. So, today we'll be covering a very important discussion of Caro 2020. This is applicable for CA Inter also and even for my CA Final. So, what is Caro? The full form of Caro. It is Company Auditor's Report Order. As the name says, it is relating to company audit. So, when a company auditor is making his report, he has to include some additional points. And these additional points are given under Caro. Who gives Caro? Central government gives Caro in consultation with NFRA. And under which section they give it? It is under section 143(11) of the Companies Act. So in simple words, if I have to say, section 143(11) of my Companies Act, which deals with all duties of the auditor, clearly mentions that central government with consulting of NFRA can issue additional reporting requirement. So company auditors will have to report on that. And under that only they have issued Caro 2020. Originally, before Caro 2020, we had got Caro 2016. And there were 16 additional points which auditor had to report on. And Caro 2020, which is applicable from 21, 22. This is the first year when we will be reporting on Caro 2020. It has got 21 points. So what are we going to be covering today? We are going to divide this Caro in 3 parts. First, we are going to learn about applicability of Caro. To which companies do they apply? Okay. We will do some problems relating to that. Second, we will learn about the 21 points of Caro. And then we will be doing some practical problems about these things. So everything that you need to know about Caro is going to be covered. Not only that, the notes also I have included almost 30 odd practical problems of Caro. Okay, and everything is very nicely given. So these notes also will be attached. You can all go through the notes, understand everything properly, and we'll try to remember all the 21 points. It will be best if we can remember it in sequence. So we will try to do that. Okay, so come on, let us start with Caro 2020. So as we discussed under section 143(11), the central government in consultation with NFRA has issued Caro 2020. And when was this issued? It was issued in 25th February 2020. Originally, it was made applicable from the year 2021 onwards. But we all know our 2021 year was a disaster because of COVID. So then what they did was then they extended the Caro applicability and then it was made applicable for the year 21-22 and onwards. So the first reporting is going to happen for the financial year 21-22. And as an auditor, we will have to report 21 extra points from the year 21-22 onwards. Okay. So, like we said, it's an additional reporting requirement. So now Caro 2020 is divided in 4 paragraphs. Okay. Paragraph number 1, which is very important, deals with the applicability of Caro, to which companies it applies, to which company it does not apply. So this is very important. We have got some problems purely only for these points. Okay. So this is my first paragraph which talks about our applicability of the Caro. Okay. Second paragraph which tells me about the reporting which we have to do as per paragraph 3 and 4. Okay. So para 2 just says that auditors report, you're a company auditor report. You're a company auditor, you're making your company audit report, you have to give these extra points which are given in paragraph 3 and paragraph 4. Plus para 2 also tells me that this particular Caro, okay, will start for the financial years commencing on or after 1st April 21. So as we already said, it will be applicable for the year 21-22 and onwards. Okay. Also, this also says that this order will not apply, very important, to the auditor's report on consolidated financial statements. So this is not applicable to CFS. So Caro only applies to the standalone SFS, not for reporting on CFS, except there is a clause 21 of Caro, the last clause of Caro, where CFS point is mentioned. Except that point, CFS reporting Caro does not apply. Okay, so this is what para 2 tells me. Para 3 is the main body of Caro, which gives me my 21 points. Okay. So this is given under my paragraph 3. So you can see exactly how the language of the order is. I've given you exactly in the same language. So here we have got all your 21 points and all of them are in what? Para 3. Okay. And para 4 just says that if you're not satisfied with any of the above points, like in those 21 points, if you are having unfavorable answer or you want to give qualified for a certain point, then you will have to give those points as per para 4. Okay. So if in the auditor's report, in any of the questions which are given in para 3, that is in your 21 points above, if any of them your answer is unfavorable, or you have a qualified answer. For example, in Karo, first point we have got PP, property, plant, equipment. Have they done physical verification time to time? And your answer is no, they have not done it properly. Then you will have to give them as per para 4. You will have to give the basis why you are giving such unfavorable opinion. Also, you have to give the reasons what is the there why you are giving that. And if any point you're not able to give your opinion on any of those 21 points, if you're not able to express your opinion on any of those above points, then also you have to give the reasons why you're not able to form your opinion. Simple words. So para 4 says if you're not satisfied with any of the 21 points reporting, give the reasons, or if you're not able to comment on that, give the reasons for the same. So this is exactly what my 4 parts of Karo are. So come on, let us start with paragraph 1. Paragraph 1, short title, application of Karo and commencement. Okay. So very easy. Karo applies to every company. Amazing. Including foreign companies which have a establishment in India and which may be incorporated outside India, but they also have to report on Karo. Company auditors report order. So now when I say it applies to every company, including foreign company, but there has to be some exception. Without exception, how can there be anything, right? Except, so now we have got 6 companies to whom Karo is not applicable. Okay, it applies to every company except, I call them so BIPs. So BIPs. These are the 6 companies to which Karo does not apply. First one, S. This S stands for small company. Small companies, Karo is not applicable. Now, what is the definition of small company? That also I have given here. Note number 1. Small company is what? A small company is one which has paid up capital less than 2 crores and which has turnover of less than 20 crores in the preceding year. If you have this, then in that case both conditions are satisfied, then it's a small company. Remember, these are the amended limits which have been put. So Karo doesn't apply to small companies which are having paid up capital less than 2 crores and turnover in the last year is less than 20 crores. Then Karo not applicable. Okay. Small companies, like I said, satisfying both the conditions. This is S. Then O. O stands for OPC. One person company. Karo doesn't apply to OPC. Simple. B. Karo does not apply to banking companies. Okay. I. It doesn't apply to insurance companies. P. It doesn't apply to private companies. But private companies, we have got some more conditions. So we will see them separately. Okay. Private conditions is the most important point, number F. Because maximum times when they ask you a question on applicability, they ask you relating to private companies. So we will see that separately. So SO, that is small company. We have got OPC, banking companies, insurance companies, private companies satisfying some conditions. And last S, section 8 companies. Section 8 companies are which? Non-profit making organizations, right? So those or non-profit organizations, they also are exempt from Karo reporting. So these are the 6 companies which Karo does not apply. Now one question may come to your mind. Does Karo apply to branch reporting? Okay, so if I'm doing audit of a particular company's branch, will Caro apply to that? Answer is yes. Point number BC of your notes. Provisions of Caro are equally applicable for branches also, because branch auditor has a similar duties like a company auditor, so they are applicable. Then we already said it shall not apply to report on CFS. We already said this. And yes, if a company is covered under small company definition, then also it will remain exempt, though it may fall under private company. Like you see that point number F, it may happen that a company is a private company, right? And it is satisfying, it may be not satisfying these conditions. I'll explain that to you. But it is falling under small company definition. Then it is exempt. Don't need to see anything further. Okay. So these are the points which you need to understand. So now I'm going to focus on private companies. What are the conditions in case of Caro being exempt? Okay. So first and foremost condition, a private company should not be the subsidiary or the holding company of a public company. So when I say private company, it should not be a subsidiary or holding company of a public company. If it is that, Caro is applicable. Don't go further. Okay. So first condition is about your don't be a subsidiary or holding of a public company. And you have to satisfy my 3 more conditions. You have to satisfy all the 3 conditions. Very important. All 3 conditions satisfied. All 3 conditions to be satisfied. In simple words, even if one condition not satisfied, Caro is applicable. Caro is applicable means what? You have to report on 21 points of that private company. That's it. Company auditor, you have to report on 21 extra points if any of these conditions are not fulfilled. Okay. These 3 conditions plus one condition already we attached. Which condition? Right? Private company is not a subsidiary of a holding, not subsidiary or holding company of a public company. Was private, not a subsidiary or holding of public company. Plus these 3 conditions. Simple words where you can say you have got like kind of 4 conditions. So now what are these 3 conditions, right? The first condition deals with your paid up capital and reserves. Your paid up capital and reserves of this private company should be less than or equal to 1 crore. Simple. Limits are very easy. 1 crore, 1 crore, 10 crore. What is 1 crore first? 1 crore for your paid up capital and reserves and surplus. This we have to see for the last year on the balance sheet date. Okay. So if I am doing the audit report for the year 21-22, on 31st March 22, I have to see what is the paid up capital and reserves. If it is less than 1 crore, good. And its total borrowings from banks, financial institutions should be again less than or equal to 1 crore. But this 1 crore I am seeing is at any point of time during the financial year. Very important. Any point of time during the financial year. So let me explain this to you. Suppose I am doing reporting. Let's say we are doing reporting for the year 21-22. So first what I checked, I will be checking your paid up capital and free reserves. Not free reserves, paid up capital and reserves and surplus. Should be less than or equal to 1 crore. This I will see as on 31st March 22, balance sheet date. Okay. Second condition, what I will be checking? The loans. When I say loans, borrowings from banks and financial institutions. All together. So I have one loan from one bank, I've got another loan from a financial institution, I've got one loan from a NBFC. I have to take the total of all of them. And this loan, when I check, it should be again less than or equal to 1 crore. And when I talk about this limit is at any point of time, any time during the year 21-22. So it may happen that in April I have taken a loan of 105 lakh, means 1 crore 5 lakh. And by the end of the year I have paid 5 lakh, I have paid 6 lakh. Now my amount is 99 lakh. Will Karo be applicable? Answer is yes. Why? Because I have to see the amount throughout the year. Even one day if I have exceeded 1 crore limit, Karo is applicable. Get that clear. Okay. So even one single day I've got more than 1 crore from the bank, Karo is applicable at any point of time during the year, right? And the third condition, when I talk about, third condition deals with my total revenue. Okay, total revenue. Now as per schedule 3, we don't call this total revenue. Now we call this total income. This is a requirement of schedule 3. Schedule 3 has changed now. And schedule 3 says that you should not, see, when I talk about P&L format, I have got revenue from operations and I have got other income. This total is called total revenue earlier. Now this total today is called total income. So total income, okay, should be less than or equal to 10 crores. Again, this when I talk about, it is going to be during the financial year 21-22. I mean, like normal during the year, I will see what is the turnover and accordingly I will be giving this. Okay. So this is how you have to go about it. Now, there are some things you have to understand here. Okay. When I say paid up capital, okay, let us understand. When I say paid up capital includes equity share capital plus preference share capital. One thing. Okay. When I say reserves and surplus, it includes capital reserves, it includes revenue reserves, it includes your P&L balance. That is we call surplus. Okay. That is also included. Capital reserves, revaluation reserves, revenue reserve, general reserve, all reserves are included. If P&L is showing a debit balance, that is a loss, then we minus that also. Okay. So you'll have to show net. Right? So when I talk about reserves and surplus, all reserves. When I talk about paid up capital, it includes equity, preference shares, both. Okay. Then comes when I talk about loans from banks and FIs. When I say loans, it is including long-term borrowings and even short-term borrowings. All loans. Overdraft, cash credit, everything is counted. No exemptions. Okay. This is there. When I say banks and financial institution, includes NBFCs also. This is what you have to remember. And when I say total revenue or total income as per schedule 3, as per schedule 3, this includes what? This includes my obviously revenue from operations and other income. Even other income is considered. This is mainly your sales, okay, your turnover that I talk about. So this is there. And even your discontinuing operations, even this sales including, where do I write it here? Including discontinuing operations. Even that is included in your turnover. Okay, I mean in your revenue, that is also counted. So this is very important to understand what all is counted, what all is not counted when. See, this is where this loan borrowings, be careful at any point of time during the year. Okay, so remember all three conditions are satisfied, then only Karo will be not applicable. So again, paid up capital reserves, borrowings and revenue as per schedule 3, including revenue from discontinuing operations, limit is 1, 1 and 10 crores. Okay. And what I just told you, what is paid up capital including, what is borrowings going to be included, everything I have given here in your clarification. See, the first clarification we have is for paid up capital. Paid up capital includes equity preference, as I said. Even if you have forfeited shares, right? Forfeited shares, the amount received is what we show it at. This is also added to my capital. But what if I have got application money? Company has got application money, but they have not given allotment of shares. Should I count that in my share capital? Answer is no, because it's not yet allotted. It's not share capital. So share application money should not be considered. Clear? So these 3 points deal with my share capital. And then reserves. We already said we include all the reserves. Capital, revenue reserves, reval reserve, everything. Even P&L credit balance is taken. But if there is a loss in the P&L, right, in case of debit balance of P&L, it should be netted off for calculating reserves. So if there's a loss, minus that and then see this thing. Okay. So we have got problems on this. We are going to do it right after completing this point. So now this was about share capital reserves. Borrowings, we said yes, you have to take all the banks and financial institution, all loans are taken, including NBFC loans, right? Term loans, demand loans, short term, long term, overdraft, cash credit, bills purchased, discounted, everything is taken. Okay. In fact, even if you have got an example, letter of credit, you know, letter of credit, where bank is giving fund based, we have taken loan from the bank, means it's only a letter of credit, like a guarantee. Okay. Now, what is this letter of credit or guarantee? Bank gives to the company. That company will pay the amount. But suppose company has not paid the amount. Let's say I want to import some goods from a foreign country. So that person says, I don't know you. So I say, okay, fine, I will give you a bank guarantee or a bank letter of credit. Based on that, he can send me the goods. Now, when he will send me the goods and I have sent the letter of credit, and suppose I don't pay the amount, then that person will ask my banker, I've got letter of credit, give me the money. If that happens, then that amount becomes fund based, because now bank has given money to that person. So it is like a loan now. Okay, it will be counted. So non-fund based thing, non-fund credit which have been devolved. Devolved means now the liability is incurred. That is also, it has been converted into fund base. It should be treated as a loan. If it is only a guarantee letter, only a letter of credit, it is not counted in that amount. But if I have defaulted and now that amount is payable to the bank, it will be counted. Okay. Not only that, we already said long-term loans, short-term loans, secured loan, unsecured loan, all counted. Credit card loans are also counted. Interest accrued and due also is part of the loan, because it is due. Na? If it is not due, it is not counted. Okay. I hope this is clear. This was my 2 points. And the third point we had got is total income as per Schedule 3. Now, when I say total income as per Schedule 3, we already said it includes what? It includes revenue from discontinuing operations, revenue from operations, other income. When I say sales, that is my turnover. It is net of trade discount, because we always show net of trade discount, right? Any services are there, we add that. Sales return, we will minus. GST separately collected, so we'll be showing it separately. Then in that case, it is not counted in your turnover limit. Okay, so this will be net of these points. Okay, and other income is normal interest income, dividend income, other income which is there. So all these things we have to see. And mind it, all this was about applicability of Caro. So Caro applies to all companies, including foreign companies, excluding SOBIPs. Small companies excluded, 2 crore, 20 crore, both limits satisfied. OPCs, banking company, insurance companies, your Section 8 companies, and private companies satisfying 4 conditions. Not being holding or subsidiary of public, and 3 limits are there. 1, 1, 10. What are the 1, 1, 10? Reserves and share capital less than or equal to 1 crore last year. Second, banks, loans from banks, FIs less than or equal to 1 crore at any time during the last year. And third, I talk about total income, which includes other income and your net sales which are taken. Okay, so all these things have to be satisfied. Even if one condition not satisfied, Caro is applicable. I hope this is clear. For private companies, only these points are. For the other banking, insurance and all, don't see anything. It is not applicable. Only for private company you have to see these points. So these are your applicability questions. Let us see now for this. Come to problem number 1. Come on. Applicability of Karo. Quick questions. We have easy ones. S Private Limited took a loan of 1.5 crores from a bank. They repay the loan on 30th June. Will Karo be applicable? Even if the loan is 0, but any point of time, yes, it was more than 1 crore. Answer is it will be applicable. Done? Because at any point of time you have exceeded 1 crore. So simple. Second one. X Private Limited is a subsidiary of a listed entity. Nothing you need to see. You're a subsidiary of a listed entity, means subsidiary of a public company. Will Karo be applicable? Yes. Exemption is not applicable. Exemption is not applicable. Karo is applicable, right? Because you're a subsidiary of a public company. Done? Third. Read it yourself. Subsidiary of a foreign company incorporated outside India, right? But we said Karo is applicable to even foreign companies. So yes, it will be applicable. Okay. See here in particularly these answers I've just given you hint. Hint means simple yes or no. But when you write in the exam, you will have to explain the point and then you will have to write the answer. Okay. Now here comes private company giving you, we have 4 cases. Okay. First case, is Karo applicable or no? You have to say. Paid up capital, reval reserve, capital reserve, revenue reserve and P&L debit balance. Loss is there. So first case, we'll take the total. What is it? Paid up plus reval plus capital plus revenue you will add. All this you will be adding. And only P&L you will minus, right? So you can check. The total is coming 99 lakh, I guess, right? Is Karo applicable? Not applicable. Less than 1 crore. Second one, applicable? Yes. Last one, third one, 60 plus 20 plus 22 minus 4. Not applicable. Less than 1 crore, no? 98 lakh it's coming. And last one, this will be 150 minus 60, right? That also you have to minus. Even if you don't have any reserves, your P&L debit balance is always minused, okay? 90 lakh, again not applicable. So only second case it's applicable, otherwise it is not. This not applicable, Karo applicable, correct? Here not applicable and last one not applicable. Easy. Fifth one. Come on. You analyze the question, then we will discuss. As I always tell you, when you analyze, read properly, use your pencil, underline the keywords, okay? So 3 conditions for private companies. First thing I checked, it is a private company. 2 banks, they have taken 40 lakh each overdraft. Will it be counted? Yes. 40 lakh, 2 banks. Each. Huh? So it will be 80 lakh plus 36 lakh, another overdraft from a FI, financial institution. So they have crossed 1 crore in loans. Then they have got some paid up capital reserves, 80 lakh. So first condition, 80 lakh, it is within 1 crore. Even the turnover is 6 crores, so it is within 10 crores. But one condition they have not followed, or they have violated the limit. Correct? So simple words, company saying that, oh, no, Caro is not applicable. They're saying don't take cumulative, take individual. Any rubbish. Banks, FIs, we have to see total, and it is more than 1 crore. Other conditions not interested, because even if one condition not fulfilled, Caro is applicable. So they are not correct. Their total borrowings exceed 1 crore, hence reporting is required. Easy. Sixth one. They have issued shares of 80 lakh. Again, private limited company. 80 lakh share capital. Borrowed 25 lakh from 2 FIs each. So 50 lakh borrowings. Turnover is 975 lakh. Net of GST it is. So good, it should be net only. Will Caro be applicable? Let us see. First one. Share capital is and reserves. Reserves is not given, so only share capital balance I'm seeing. It is 80 lakh less than 100 lakh. Second, borrowings are 50 lakh, which is again less than 100 lakh. Turnover is 975 lakh, means 9.75 crores, less than 10 crores. Other income is not given, so ignore it. Therefore, all three conditions are fulfilled. Caro does not apply. Okay, and of course you're assuming it is not a holding or subsidiary of a public company. That is assumed. Okay. Seventh one, is Caro applicable? Sales are given, GST separately collected, so leave it, ignore it. Sales return, what you do? Minus, and commission paid to third party. Paid to third party. This will not be minus, right? Should be deducted. Caro will not be applicable because you can see 9 crore sales minus sales return, it is within 10 crores. GST you can separately consider, not to be taken. Commission paid to third party, not taken. Still it is less than 10 crore. Caro will not be applicable. Eighth one, last one. Paid up capital and reserves less than 100 lakh. Okay, first condition satisfied. No loan exceeding 100 lakh. Second condition satisfied. Sales, let us see now. Sales are 12 crores before deducting trade discount. So we need to minus 20 lakh. So 12 crore minus 20 lakh. Sales return minus 1.9 crores. Should we take services rendered? Yes. Services rendered, other income, everything we take. So we will take 0.2 crores. So yes, it is coming 10.1 crores. And 10.1 crore means Caro is applicable, will apply. So this is how you write. Three conditions, how they have satisfied. And I told you one blanket condition. Always mention that it is not a holding or subsidiary of a public company. And remaining conditions we have to check. So applicability part is over. Now we can start with our 21 points of Caro. One by one, let us understand these points. And we have got some, problems on that also. We'll do that as well. So the first point now of Caro. See, there are clauses, 21 clauses, and every clause has got some sub points. So we need to understand that also. And every clause we will give a name to that clause, which will help us to remember the clauses. Okay. So the first one we call it PPE clause. Okay. So it's a very easy clause, but it has got 5 points in it. So property, plant and equipment. So whether the company is having proper records. So the first point we have is, do they have proper records? As in, do they have a proper PP register? Showing details about the quantitative details, like how many are there, situation, location, where is the PP located. So do they have a proper PP register? And similar register we want even for the intangible assets. Simple. This is a reporting requirement. We have to report whether they have this proper records. Okay. So this PP point, what we have done is we have got 5 points in that. So to remember those 5 points, we are going to have a small technique again for this. Okay. First, we'll understand the 5 points, then we will try to remember them. The first one in PP, what will you see? Proper records are maintained. Okay. So it's about the records. Okay. Second, whether this PP has been physically verified. So physical verification has been done by the management at reasonable intervals. Reasonable intervals will depend on the type of business. Generally, if it is done biannually or even annually, sometimes it's okay as long as it has been done. And on physical verification, did you have any discrepancies? Discrepancies means material differences. Any problems came, like sometimes register is showing the PP but we are not physically being able to locate it, or physically we are seeing some PP but we don't have it mentioned in the records, anything like that. So in this situation we need to report. Okay, so whether the PP is physically verified and discrepancies have been properly dealt with in the books. So physical verification is my second point. Third point I'm going to have is about these 2 points were always there, A and B. Now new points what came, like even Caro 16 had this point. Okay, but new point now they have given is about title deeds. So whenever we have got immovable property, land, building, mainly land and building, okay, all the immovable property should be in the name of the company. Normal, because it's a company's balance sheet. But if any of the title deeds are not in the name of the company, if the title deeds are disclosed in the FS, are held in the name of the company, all of them, if not, they are not held in the name of the company, give the details in the following format. In fact, this point is also there in my Schedule 3. Now, Schedule 3 also amendments have come, additional report, disclosures have come. So, in those additional disclosures also they have said. Okay. Now, there is an exception which is given in bracket here. Other than properties which have been leased by the company. See what happens. As per leasing, if you see as per AS 19 or in AS we have got 116, if you are taking it on finance lease or whatever lease you are taking it, you are showing this asset in your books, right? But legally you are not the owner of that. So that we cannot say title deed will not be in the name of that company because legally they are not the owner. They're showing it because of accounting standard requirements. So leave that. But apart from that, any land and building that you are having, is it in the name of the company? And if not in the name of the company, then we need to report about it. Simple. So this deals with title deed. This point deals with title deeds. So if it is not in the name of the company, what will you do? You'll give the description of the property, the amount, whose name it is held in, is it any promoter, director, a relative that it is held in, what is the period it is held for, and why, the reason it is not held in the name of the company. Same ditto requirements you have for Schedule 3 also. Okay, but the difference is in Schedule 3, company has to disclose in the notes to accounts. In Caro, auditor has to report about this. Okay, this is my third point. Fourth point, has the company revalued its PP? Have they revalued the PP during this year? Including the ROU assets, means right of use assets as per Ind AS. It is like leased assets we are talking about, okay? Or intangible assets, have they revalued? Whether evaluation is based on the valuation done by registered valuer, again Schedule 3, similar thing. So, have they done revaluation? If yes, is it done as per registered valuer? If yes, give the amount of change, what is revalued, and most importantly, if changes 10% or more in the net carrying value of the intangible assets. So this you have to give only when your changes more than 10% of the things. Okay, specify the amount of change if it is 10% or more than that, the net carrying amount. Okay, have they done revaluation? That you will check. Have they done it through a registered value of fine? But amount of change you will only give when it is 10% or more of the base, the carrying amount. Okay, this is about revaluation point. And last point, are there any cases against the company? Is there any proceedings or legal cases against the company for holding any Benami property? Benami property means it is not properly in the name of the company. Okay, it is in someone else's name, but company is using it. Okay, so that is like we have got a Benami, Transactions Act is there. So is it under that? If yes, give the disclosures of the same. If company has disclosed, very good. Again, Schedule 3 requirements. This is only for you to understand. These 3 points now which have come, this has come like as per Schedule 3 also. This is also given in Schedule 3. Okay. So now how do we remember these points? We call this R, P, T, R, B. Records are maintained properly. Physical verification has happened from time to time, and any discrepancies have been properly dealt with in the books. Title deeds are in the name of the company. If not, give the details. R deals with revaluation done by registered valuer. And B, Benami properties in the name of the company. Is there any case or anything against that? So the first point I have got is PP, and under PP we are going to check these 5 things. Okay, so I hope this is clear. Now coming to the second point. We call it inventory. Inventory. Simple point, for inventories we have to mention whether physical verification is done at reasonable intervals by management. What is the procedure and all? Is it properly done? Is it appropriately done? Okay. And if on physical verification you have seen discrepancies of 10% or more for the inventory. Okay, for each class you have to see. Each class of inventory means you have to see for raw material, WIP, finished goods, stock in trade, okay, anything. If the discrepancy is more than 10%, whether it is properly dealt with in the books. See, inventory is an item where there can be discrepancies, differences. So if it is material, like 10% or more changes are there, what you're seeing physically and what is there in the books, then auditor will have to see whether it is properly dealt with. If not properly dealt with, report about it. Simple. Para 4 already told me. If you're not satisfied with anything or not able to check anything, give it in the report. So this is what about inventory. Simple physical verification. Okay. And second point about inventory we have got, if they have taken any working capital loan, company has taken a working capital loan in excess of 5 crores. So working capital loan means it's a short-term loan. Okay. And short-term loan is generally secured on current assets. And inventory is a current asset. So have you taken 5 crore above loans from banks or FIs, working capital loan, then you have to submit your quarterly returns with the bank. Okay, this is my working capital, these are my current assets. So does that tally with your books? That's we have to check, right? Whether the quarterly return statements filed by the company are agreeing with the books of accounts. If not, give the details. Caro is like that only. It asks you questions. Is it tallying? Yes, it is tallying. No problem. Not tallying, then report. This is called negative reporting. Okay. If everything, physical verification is happening, very good. No problem. Not happening, report. This is how it is. So your 2 things in inventory you have to report. One, you have to report about what? 2 things in inventory. First is physical verification. And that 10% or above you have to see. And working capital loan if you have more than 5 crores. Now when I say 5 crores, it is aggregator from, if I have taken say 2 crores from one bank, 3 crores from another bank. So I have to see total 5 crores, okay? Not from one bank 5 crores. This is important. So whatever quarterly returns you have filed, are they tallying with the books? That's all you have to see. Clear? So inventory, this was my second point. Third, loans. Write down point number 3. Every point we are giving a head, okay? So loans are advances given by the company. Loans, advances, investments, any name you call it. Guarantee given. all this if company has given. Okay. So our company has given any loans or made any investment or given any advances, right? To companies, other firms, LLPs, any party, anybody you have given this, okay? Get it clear. Has the company, whether the company has made any investment, given guarantee, granted loans, advances, secured, unsecured to any other company, LLPs, partnership firms, individuals, anybody. Have you given loan? If yes, you have given loan, then we have to see these 6 points again. There are 6 points minded. Okay, so one by one, let us understand loans given. Loans given, first one. The aggregate amount during the year, right? And the amount outstanding at balance sheet date we have to give. This amount we have to give for whom? For the amount which we have given to subsidiary associates or joint ventures of the company, and even other than that. Okay. So even if it is given to subsidiary joint venture associates, again amount outstanding, balance amount given and amount outstanding, we have to give to even other parties, you have to give the details. Simple words, have you given loans, investments, guarantees or anything to another company, individual, partnership firm or LLP, right? So we want the amount outstanding and the amount that you have given. Okay, and this we need separately. Separately for whom? One, which you have given to your own companies, holding, subsidiary, associate, joint venture, whatever, subsidiary, joint venture, associate, okay, or others. You have to give that. So that is one. Give the amount outstanding. Then, after the amount, what do we have? Next, we have got the terms and conditions in which you have given the loan. Are those terms and conditions prejudicial to the interest of the company? Prejudicial, harmful for, or hampering the interest of the company. So you have given the loan, first point. What are the terms and conditions? Are they harmful for the company? For example, I'm giving interest-free loan. No interest I'm charging. Not good enough for the company. Your company is borrowing money, paying interest to everyone, but here they are giving it without interest. So then that is prejudicial. Then we have that. We have to report. So terms we have to report. So first what we said, first we talked about the amount outstanding. Okay. Second we talked about the terms and conditions. Are they prejudicial? Okay. Third, now whatever loans they have given, are those loans getting repaid in time? Okay. So is the schedule of repayment happening? Is it regularly coming? Third point is about repayment. You have given the loan, okay, fine. Is the amount getting collected in time? Okay. Now after this, all the points are linked. All points are linked. Is amount collected in time? Repayment is coming in time? No, repayment is not coming in time. Then is the amount overdue? And if it is overdue, have you taken reasonable steps for recovery? Reasonable steps for recovery. If the amount is overdue for more than 90 days, normally 90 days, like how we do for NPAs, up to 90 days, it's okay. But beyond 90 days, we treat it like a non-performing asset. In banks, I'm not just giving an example. So if it is overdue for more than 90 days, then we will have to see whether they have taken reasonable steps for recovering the amount. So this is what? Recovery. Recovery of the overdue amounts. 1, 2, 3, 4. Right? Then, what if they have not recovered the money, but company is playing smart? So suppose now company has given a loan to a partnership firm and they are not able to repay that loan. So company gives a new loan to that partnership firm and pays that old loan. And then they say, it was overdue for less than 90 days and that loan is over now. They have repaid. But they repaid with a new loan which company only gave. So then that situation will come under fifth point. If there was any loan which was fallen due, see, the loan had fallen due. Please highlight what I'm doing because it will help you to focus on the main points. Okay. If the amount of loan was fallen due, has it been renewed or is it extended, or whether fresh loan was granted, right, to the same party. Then give that also amount. We want to give that amount also in terms of amount and in terms of percentage, both. Of course, this will not apply to companies whose main business is giving loans. See, there are obviously some clauses which will not apply to them. Now, this, see, in the beginning only they said not applicable to companies whose principal business is giving loans. If that is your business, obviously this is not going to be seen. Okay. So I hope this is clear. This was what? Fresh loans given. Renewed or fresh loans given to the same party. And lastly, is it loans repayable on demand? See, repayable on demand means when company will demand, then only they will have to repay. So company might give their promoters, directors, key managerial personnel, they'll give loans that it is repayable on demand only when company will demand. And they are the ones managing the business. So why will they demand their own loan? You got it? So if company has given any loans which are repayable on demand, granted loans which are repayable on demand or without particularly the terms or period of repayment, again we have to specifically given the amount, the percentage thereof, which are given to related parties, promoters, etc. We need to give that. Schedule 3 also gives same points. Okay. Schedule 3, lot of things because of Schedule 3 have come under Caro. This is also one of them. Simple words may now, what are the 6 points we have here? Loan is given, loan given by company, advances given, investment done, or guarantee given. Anything. Is it given? Give the amounts first. See terms are prejudicial or no, means hampering the company. Then is the repayment coming in time? If not coming in time, overdue for more than 90 days, then give that. What steps they are taking for recovering the amount? Are they taking reasonable steps? And reasonable steps does not mean fifth point giving them fresh loans or extending the time. If that has happened, mention that also. And lastly, if they have given loans repayable on demand, so terms are not specified how to repay, then that also we need to mention over here. So you will see Caro requires us to go quite deep. As an auditor, we have to go quite deep into all the things. Okay. And lots of points have been added here. I mean, compared to Caro 16, these 2-3 points are extra. These last 2-3 points are extra. Okay. So this was my point number 3. Loans, investments, etc. Then again, point number 4 is a simple point which talks about again loans, investments, etc. made. But here you have to see the loans, investments, guarantees and all given, whether section 185, 186 have been complied with. So 185, 186 talks about loans, advances given, investments given. It talks about limits up to which a company can invest or give loan to other companies. Also, it talks about investments, I mean amounts given to directors, related parties. Simple words may whether compliance of these section 155, 185 and 186 has been done. Okay, so it's a very simple clause just saying whether they have fulfilled the conditions. Okay, about these two sections you learn in CA final. CA final students already know these sections. Inter students they're not expecting you to know the section content, but at least you should know the point, whether it has been followed. So what is the name of this point? We will say loans, investments under section 185, 186, the compliance section we have to check. Compliance, okay? This is the 4th point. So now, what are the 4 points we have seen so far? We call them PIL. PIL. What is PIL? PP first one, inventory. L was what? Our loans, advances, right? 4th one is also loans, but this is under 185, 186 compliance, okay? Then D, my 5th point is D, deposits from public. This is again a very self-explanatory clause. Has the company taken deposits from public? So where the company has taken deposits from public, See whether directives of RBI have been followed. Section 73 to 76 have been followed. If there's any contravention of the sections or the RBI regulations, then we need to report about it. Okay. Also, if there's any order by CLB or tribunal, whether it has been complied with or not. Simple deposits from public. Have you followed the Companies Act and all the required regulations? If not followed, report about it. So, this is what you have. Then sixth point, maintenance of cost records. Cost records, that is the name of the point. Cost records. So if you are a company who has to maintain cost records under section 148 subsection 1, this section 148 detailed section you have in your syllabus. Okay, you should know this. So if you are a company to whom cost records, accounting records are to be maintained, auditor will check whether you have actually maintained, whether these accounts records have been properly maintained. Okay, so this is what you have. Bill, and then we call it DCS. Bill, DCS. D is deposits from public. C is your cost accounting records. Just write cost accounting records. Okay, so Bill, DSS, 7 points. Try to remember it in the same order. Okay. S, I have not yet told. S is the 7th point. Statutory dues. This one. So what is the 7th point? Statutory dues. Pay attention. Now what happens? A company has to pay their statutory dues. Statutory dues means any amount payable under a statute, under any law. Whether be it income tax, whether be it GST, whether be it your provident fund, all these are the amounts payable under a law, under an act. So is the company regularly paying those amounts? If not, give the details of the amount which is outstanding, which the company has not paid. Okay. So next, statutory dues. Is the company regularly depositing the undisputed? Undisputed means where there is no legal case, no fight going on. Company knows this amount is payable. So are they depositing the undisputed dues including GST, PF, ESI, income tax, sales tax, service tax, whatever, custom duty, etc., etc., etc. Any amount which is payable under a statute, under a law. Are they paying that? Right? If not, we want the amount of outstandings which are payable on the last day of the financial year and they have been outstanding for more than 6 months from the date they become payable. So it may happen that you have one delay in the payment. It's okay. We are saying outstanding, the due is more than 6 months. Then auditor will have to report about it. Okay. So the idea about this is all investors should know the company is not regularly making their payments. Okay. That is the idea behind this clause. But what if company is having a dispute? So income tax, we are fighting. We don't want to pay that tax. Then that will be reported under point number B, where statutory dues are not deposited because of some dispute, some legal case. Then the amount what is involved and the forum where it is pending should be mentioned. So forum could be where it could be at the tribunal level, it could be at the it could be at, like, it could be at the court level, it could be at Supreme Court, it could be High Court. Where is the case going on? Give those details of the case. Okay. So statutory dues, are you regularly paying? If not paying, give the details. If it is a dispute, give the dispute details. What is the amount? Where is the case pending at High Court, Supreme Court, Tribunal means what? Where is it pending? Give the details. Statutory dues, point number 7. Bill, DCS. Okay, so 7 points are over. I hope this is clear. Now, the next one we have got is your unrecorded transactions. Write down the point. unrecorded transactions, or we can call it undisclosed income. Again, Schedule 3, this point has come up, where any transactions which are not recorded in the books have been now recorded or surrendered or disclosed under the assessments under the Income Tax Act due to some search activity or some assessment time. Some undisclosed income has come into picture which had not been recorded in the books properly. So now whether that previously unrecorded income has been properly recorded, if not recorded, give the details of the same. Okay, so undisclosed income of previous years, if anything has come now, see that it is properly recorded and everything is completed. Okay, so this is my point number 8. Point number 9. Now, earlier points we saw loans 2 points, but those were loans given by company. Loans, investments, advances given by company. Point number 9 deals with loans taken by the company. Okay, so this is what the loans taken by the company. Okay, so now when I take loans are taken by the company, then we have to see some additional requirements again. So there are 6 requirements for loans taken. We will just see them one by one. First thing, you have taken the loan. Have you defaulted? So the first thing I check is default in the payment. Have they defaulted in repayment of the loan? If they have defaulted, we want the details. What details we want? That what is the borrowing, who is the lender, the name of the bank and all you can mention, amount not paid on due date. Okay, in principal interest, what is not paid, how many days have been delayed, and what are the remarks. Simple words, company has taken loans, company has defaulted, mention that. Okay, again this will create a shameful for the company, and company should repay in time. That will be the whole idea. Same with statutory dues. Okay, so loans taken by the company, first we will talk about default. Have they defaulted in the payment? Then, are they a willful defaulter? Have they been declared willful defaulter by the banks? Who is a willful defaulter? A one person who has actually willfully, purposefully defaulted on the payment. He could make the payment, but he has not done it. Okay, so banks declare them in willful defaulter. Like best example, Vijay Mallya has been declared a willful defaulter. So like that, if the company is declared, we need to give that here. Okay, again schedule 3 also at similar points. Then the purpose for which the loan was taken, whether it was applied for the same purpose, and if it was diverted, please give the reasons. Now give the purpose, give what has been diverted, give that. So company took a loan for buying a building, but they use that to buy maybe a car, then you have to mention it. Okay, so simple words may the applicability. So default, this is willful defaulter. Then we have got, this is purpose of the loan. Have you used it for any other purpose? Okay, one very interesting point is point number D. Your short-term borrowings, have they been used for long-term purpose? STB means short-term borrowings. Have they been used for long-term purpose, LTP? Then that needs to be reported. See, this is not a good sign for a company. You're taking short-term overdrafts and you're investing in long-term assets, let's say PP. This is not good application of funds. This is called application of funds. So basically here what it shows is that when you're taking short-term amounts, right, you are disturbing your working capital requirement for the time, and you're investing in long-term assets which will give you return over time. It will take some time for them to give you returns. So you are disturbing your entire working capital cycle. So it is not a good sign. Okay, this also could indicate going concern issues. That's why if there's any short-term borrowings used for long-term purpose, you will have to report about it. Okay, this is about the application of funds. Okay, then we have got whether company has taken any funds from any entity on account of their subsidiaries, associates or joint ventures. So they have taken on behalf of them, their associates, joint venture, subsidiary, then you have to give that amount also here. And lastly, have they raised loans by pledging the security of the investment held in subsidiary, associate, joint venture, etc. Again, we need to give the disclosures of that. Okay. So these last 2 points deal with what? They deal with your subsidiary, associate, joint ventures. SHA means subsidiary, associate, joint venture. They deal with that. So have you taken any loan for them, or have you pledged the investment which you're having in this subsidiary, associate, joint venture, taken loan against that? We need to mention here. Okay, so all these points are with the loans taken by the company. According to me, the most important point will be default, right? The most important one, default point, then the purpose for which it is used, and the application. These are the 3 most important points. There are 6 points, but 3 are the most important. Normally question comes from these 3 only. Okay, so loans taken by the company. I hope this is clear. Next, point number 10. End use of IPO or FPO and preferential allotment. This is the name of that point. End use of IPO. IPO is your initial public offer. Whenever company has done IPO or a further public offer, they have to mention the purpose for which they are raising the public funds, and whether then they have used it for that purpose. That we have to check. Like in the earlier point, we saw end use of borrowings. Borrowings you have taken, have you used it for the purpose you have taken it? Like that only you have raised public issue. Then have you used it for the purpose that you had raised it? If not, give the details. So it's again a self-explanatory easy point. Whether money raised by way of IPO or FPO, including debt instruments, have been used for the purpose that they have been raised. If not, give the details. And next point, same 10th point, talks about preferential allotment. Has the company made preferential allotment? This preferential allotment is governed by section 42, right? So whether the provisions of the Companies Act have been followed. Preferential allotment means you're giving first preference to maybe promoters, directors or whatever. That is there in that Companies Act. So if they have given preferential allotment, then whether the requirements have been followed of the Companies Act have been complied with. Otherwise, give the details. See, I already mentioned and I'm repeating this. In entire Karo, it's all about whether they have done this, whether they have done that, and if not, give the details. Okay. So here also, if they have not applied it, the purpose for which it was raised, give the amount involved, what is the non-compliance, etc. Give all that. Again, little bit compliance section. And 11th point. Okay, so like almost half of Karo is over now with 11th point. 11th point is about fraud. So whether any fraud was done by the company or any fraud on the company was noticed or reported. Right? Company has done the fraud by the company, or fraud has happened on the company. Either ways, we have to report. Okay. What will we report? What is the nature of the fraud? What is the amount of the fraud? Give the details of the fraud. Not only that, if any report under 143.12 was to be paid by the auditor, was to be filed by the auditor with CG. Remember, ADT 4, you are filing with CG when the fraud amount is more than 1 crore. Fraud amount is more than 1 crore. Then you file with central government in form ADT 4. We have seen the whole procedure, how it is filed from 143.12 to 143.15, the whole procedure, right, of filing as per rule 13. So if at all that has happened, amount of fraud is more than a crore and it has been filed with central government, we need to report about that here. Again, we have to report. SA 240 reporting you're doing. ADT 4 you're filing, right? But still, you have to also mention it in Karo. And last one, has the company, where the auditor has considered whistleblower complaints received during the year by the company. Companies need to have a whistleblower mechanism. What is whistleblower policy? Whistleblowers, now these employees or management in the company, if they find anything suspicious or they feel there is a fraud, they can make the audit committee or the management aware of it. That is called whistleblower. Okay. So it's not that after the fraud comes out, even before the fraud comes out, if management, anyone, not necessarily any manager, CEO, CFO, anybody feels there is a fraud, or a normal employee also, then they can have this whistleblower thing. Means they will inform the audit committee about this, expected, or they feel there is some suspicious activity going on. The auditor also needs to check company has a proper whistleblower mechanism, whether they are properly seeing the complaints, and whether you as auditor have considered those complaints, because those could be suspicious areas for the auditor where he should be more careful while doing the checking. So that also you have to mention here. Okay. So 11 points over. Let us see those 11 points. We already talked about PIL. Then we said DCS, right? Now we have got ULEF. I know there is no sense to this technique, okay, because we are trying to remember it in the same order. That's why we are doing it like this. PIL, DCS, ULEF. Just keep remembering it, okay? So PIL, DCS, 7 points we already saw. What is U? Undisclosed income, loans taken, end use of IPO, Fpo, preferential allotment, and F, fraud. So 11 points, that means almost half Caro over. So before going further with the other points, small break in the terms of practical problems we'll see. Then we'll come back to the remaining points. Okay. So try to remember all these points in the same order. So if suppose fraud points come, it is clause 11. If you give that, examiner will be super impressed. Wow, he knows the clauses, right? So that's how it is, clause. And in MCQs and all, you can get this as clause. Under this clause you are reporting on all. So you should know this, right? I hope this is over. In your notebook, you can write down all the 21 clauses like properly, one after the other, and just write the name of the clause for you to remember. So let us see our problems. Come to problem number 9. What constitutes title deed? So title deed point where we had seen in our PP, right? So what includes, what is covered under title deeds? So title deeds basically will cover in case of land, building, you have got your conveyance deed, your registration papers, right? So those kind of things will be covered in case of your land and building. Registered sale deed, right? Conveyance deed, any other government authority related, papers. And for leasehold land, we will be having a lease agreement, which is there. So what is title deed is less normal. Of course, you have got lots of things in that, like 7/12 extract you have got for land. Index 2 you have got for building, and also those things are there. Demarcation certificates, etc. All these things will be covered under title deed. So it's a very general question. Next one. How would you report under Caro 2020? NSP Limited has its factory building appearing in their fixed assets in the FS in the name of one of the director who is overlooking the manufacturing activities. So under Caro, we are talking about a building which is there, right? So factory building is in the name of a director. So exactly in PP we had got this point. Are the title deeds in the name of the company? If not, you have to give the details. So it's a very clear case. Okay. So as per clause C1 PP, RPT we had got in that, right? RPT, RB, 5 points. So T, this is title deed point. So clause 1C, para 3 of Caro 2020. This is how you can mention it. Okay, so Caro 2020, we know para 3 has got all the 21 points. Clause 1 and C, third point in that. You have to, auditor has to report whether there is a proper title deed in the name of the company. If not, give the details, right? So this is what we have. We need to see the reasons why this is not in the name of the company. So the factory building is in the name of the director. So give the details like what are the number of, like what are the land or leasehold, freehold, what is in the name of, not in the name of the company, gross block, remarks. In case of buildings, also similar information you have to give. Why it is not in the name of the company? We had seen that small table, right? Or rather, we had seen those points. Why it is not there, or since when it is not there, etc. All those things we have to mention there. Okay. Next one, MTP question. PP of ABC includes 25.75 crore of earth removing machines of outdated technology which had been retired and from active use and had been kept for disposal, so that is ready for sale after knockdown. These assets appeared at residual value and they had been last inspected 10 years back. So we are talking of again PP, right? But this was inspected 10 years back. So this is which point of PP? Physical verification. So how would you report about it? Again, physical verification, proper records are maintained or no, we have to see, right? So under clause 1 of Caro 2020, we have to see whether proper records are maintained. And in B, second clause, second subclause, we have to see whether PP is physically verified, proper discrepancies have been noticed, and they have been properly dealt with in the books. All this is what we have to do as per Caro. And clearly in the given case, what has happened? They had intention to sell the machine, they outdated technology, they are meant for sale, and they are appearing at residual value. Right now? So this is, they had been verified 10 years back, and therefore this is not in compliance with Caro, and therefore we need to report in our audit report. Simple point. Okay? Just need to identify the point under which it is applicable. Okay. Similar point. Problem number 12. Company is in the process of selling the office and they're looking for buyers. The current market value is so much. Property is pending to be registered in the name of the company due to procedural issues. They have disclosed it under PP, but no disclosure of non-registration is given. So you should disclose as per Schedule 3 also. Plus auditor also has to mention about this point under Caro title deeds. Okay, this title deeds point. See, the question is changing, but the answer basic format remains the same, right? How you're going to be mentioning it? First, you're going to talk about the clause which is there, then you're going to explain the particular case, and then your final conclusion. Any kind of practical problem, we always solve it in the same manner, right? So first we write about the given case. So we can have like an introductory paragraph about the case. What is the case about? So that could be just an introductory paragraph about the case. Then we are going to have what is applicable. So when we talk about applicability, we are going to mention about the clause so and so of Caro. We can also talk about Schedule 3, whatever it may be, etc. What is applicable? This intro of facts of the case we give first. Then third, we are going to write what? Analysis of the given case. Analysis of the given case in light of 2 above. So this is second point. As per this we have to report. And then in the given case, how this point is applicable. So we have to explain, analysis. And then finally, we are going to have our conclusion. That you need to report about it, what you need to report, that we need to give over here. If required, depending on the question, we might also give our recommendation. But normally my answer ends with conclusion. Recommendation is not compulsory, it depends on the question. Okay, so I hope this is clear. Okay. Done with it? So come on, let's go further. Same question, that was about title deeds. Next one. As auditor, under Caro, what will you report? Physical verification of 40% of the items of stock are conducted by the company. Balance 60% will be conducted next year due to lack of time and resources. So the moment I see problem 13, I immediately relate it with my inventory point. So PP was my first point. Second point, pill, I, inventory. In that we had got physical verification. So only 40% they have verified, which is not correct. We should have verified more, right? And they're saying next year we will do it. No, it's not proper. It's not appropriate. The procedure or the extent to which you have done, discrepancies you have to check, etc. So exactly, we have got clause 2, para 3, Caro 2020. See whether physical verification has happened reasonable intervals by the management, right? At least once in a year you should have done it. This has not been fulfilled in the given case. Point out the specific areas and see the report and report accordingly. Easy one. ABC has granted a loan to its sister concern. Okay, so sister concerns, they have given a loan. So related party, they have given a loan and it remains outstanding at the year end. So loan is given and it is still outstanding. So loan given points we had got. How would you report the fact? So loan given, the amount outstanding you will report. Because it is given to sister concern, it is related party. So we have got points under Caro, which we have to still study. Okay. Related party point is there, so that we will see. The moment I say related party, automatically SA 550 will come, AS 18 or Ind AS 24 will come. Everything needs to be mentioned here. Okay, so in simple words, we have two clauses here. Clause 3, which is about loans given, and clause 13, which is about related party. I know we have not learned clause 13 yet, but it is a very simple clause. So they have given a loan, so it is covered by AS 18 or Ind AS 24. SA 550 on related parties also talks about responsibilities. So make proper disclosures as per AS and report as per Caro 2020. Easy one. Should the auditor examine the cost records in detail while reporting on Caro? So cost records point we had got billed DCS. So C point, cost accounting records. Do we need to do detailed checking of the cost records? Of course not. We are not doing audit. We are not doing cost audit. Okay, so we just have to see whether company is maintaining proper records as required by 148(1). Okay, so Caro doesn't require a detailed examination. A general review of cost records will be necessary, right? See how they are made and maintained. Normal, not as detailed or as a audit, a cost audit. 16th one. Big and small company received a show cause notice from the excise department intending to levy demand of 25 lakh in December. The company replied to the above in Jan, contending that it is not liable for the levy. So they got a letter from the tax authority saying that you have to pay 25 lakh. Company said, no, we are not liable for the levy. No further action was done by the department. Okay. So as an auditor, what is your role in this? What will you do as an auditor? So now we are talking about claims raised by the government as in statutory dues under the Excise Act. Okay. So in that situation, don't you think we should report about this? We should report if they have not paid the statutory dues in time. Should we report that? Not at all. Because it's not that it is amount is payable. They had given a show cause notice. Company explained about it and then they did not take any further action, which clearly means that the company does not have dues. So if the company doesn't have any dues payable, then what is the problem? What my statutory dues point said is the company regularly depositing their dues, and if there is a dispute, mention the dispute. Here there is no dispute, only show cause notice has come and it doesn't seem the amount is outstanding. So let us see what the answer is. Under Caro, which point of Caro? We are talking of statutory dues. If there's any amount is not deposited or there's any dispute, we need to give the details. Yes, but this issuance of SCN does not amount to, tantamount means does not amount to demand payable by the company. So there is no demand as such and no reporting is required. See, every time there comes a question on Caro, you don't have to say reporting is required. You mention the clause and you say the conclusion, no reporting is required. Okay. Then 17th one. XYZ Private Limited submitted the FS for year ending 31st March 22, they bring to your notice the following dues. Income tax relating to AY 18-19, 125 lakh is pending before the ITAT. So appellate tribunal, we have this there since September 20. Custom duty demand notice was received, but no action has been taken to pay or appeal. As an auditor, give your opinion on the above. Again, we are talking of custom duty and income tax. Both come under statute, both come under an act. So clearly this is a case covered by statutory dues point. And in statutory dues, what we have to mention, are you regularly paying the dues? And if you have not paid because of any dispute, give the dispute details, the amount and the level, the forum where it is pending. So clearly now, it is pending before the tribunal, mention that. So here in the answer, this is our institute suggested answer in the MTP. And they have given a lot of things. It's not only Karo related question. Karo is one point. Apart from that, they have also mentioned about, because we're talking about laws and regulations, they have mentioned about SA 250 also. And plus we have got our AS 29 provision, because provision needs to be made. Okay, for the second, that custom duty, it looks like we have to see that. And that's why that also is mentioned. But our main focus is going to be on Karo. Let's just quickly go through it. SA 250 you have got, right? Consideration of laws and regulations and audit of FS, right? So we have to see whether they are doing properly, as in, the laws which affect my financial statements, like whether Income Tax Act or Customs Duty, right? So you have to see the compliances, see whether their FS are free from misstatements, material misstatements. See if the non-compliance is properly reflected in the FS. If not, you have to give your opinion, which could be a qualified or adverse opinion. This is SA 250 point, right? Apart from that, you also have to report on Karo. As per Karo 2020, if any statutory dues are not deposited, you have to mention that. And the forum, if dispute is there, you have to mention that. So here the IT demand of 125 lakh has gone for an appeal. It is disputed. It is with the income tax authority. So you need to specifically mention about it. Right? Even AS 29 says that if the demand is logical, you should make a provision. And if not, you may show it as a contingent liability. But anyhow, auditors should report about it. Now in the exam, do we need to write all this? See, it depends on the question. If the question is specifically mentioning under Karo what you will report, then only this Karo part. And if it's an open question, then you can mention Karo and these other points also. Okay. For custom duty, we have got the demand. No action is taken by the management. So again, we need to report about it. Could be appeal is pending. Is it contingent liability or is it a provision? Depending on the situation, we have to see. Okay. 18th. Term loan was obtained from a bank. So here we are talking about loans taken from a bank for 75 lakh for acquiring R&D, research and development equipment, out of which 12 lakh was used to buy a car for the person who is overlooking the R&D activities. Under Karo, how would you report on the same? So loan was taken for buying research and development equipment. Here they are buying car for the research and development head. Is it correct? No. So loans taken, we had seen now. Loans taken, we have to see whether it is properly repaid in time, whether it is used for the purpose that it was obtained for. So this is that point. Not used for the purpose, right? Under Karo, we have to mention whether loans have been utilized for the purpose that they were obtained. If not, give the amount and the purpose for which it was used. See the terms and conditions. They are taken, in the given case, they are taken the term loan for R&D equipment but used it for something else. The auditor should state the fact that this amount was not utilized. Very easy answer. Again, OK Limited had taken a term loan. Again, we have taken a term loan from a nationalized bank for 200 lakh, repayable in 5 installments. It had repaid the loan due in 15 and 16 but defaulted in the next years. So loan taken and defaulted. What is your responsibility as auditor? So whether the company has taken loans, are they regular in making the payments? If not, give the details of the amount, the period for which the amount is outstanding. Okay. So what is this? Pill DCS. And we have got ULEF, which is this point, loans taken, L point. So point number 9. Clause 9 of Caro asks the company whether they have taken loan, they have defaulted in the repayment of the interest, principal, the nature of the borrowing, name of the lender, period, everything needs to be reported. Have they been declared willful defaulter? We have to see. So they have defaulted for 3 years. Simply auditor has to report about it. Okay. Like I said, you have to identify the clause under which it comes. Automatically the things will flow in. 20. Taken loan for constructing a factory, delay is there, so invested in short-term deposits. So we know the answer for this. The same one. Problem 18 was same, no? Yes, it was similar. Same answer. Not used for the purpose, correct? Suppose I ask you a question, if a company has taken a loan, used the overdraft to buy machinery, then also same clause, right? Because in that clause, even short-term funds used for long-term purpose is given. So even the same point will be covered. Okay, so it is again clause 9 of Caro. Then problem 21 is important. Come on. First you read the question, understand it, then we will discuss. So the first thing I hope you noticed in the question, there are two parts to this question. Okay, we are talking about a private company. They have borrowed a loan of 120 lakh, 100 lakh for buying a machine, 20 lakh for erecting the machine. On 31st March, the total capital and reserves. Now, off the track, they have gone in this question. And they've given capital and free reserves of the company were 50 lakh. Turnover for the year was 750 lakh. Suddenly, out of nowhere, they were talking about loan taken by the company. Now they're getting into that. Means this question is a mix of two parts of the Caro. One is applicability of Caro, because we're talking of a private limited company, right? So first we have to see whether Caro is applicable, and then we will have to do the reporting. Now you might have get a question in your mind, ma'am, in the earlier questions nowhere you saw applicable, because in the earlier questions, first of all, private limited was not mentioned, and secondly, they have not given these details. Okay, so now here they have given. So first I will check whether Caro is applicable, and then I will check what is the reporting. Okay, so two parts are there to this answer. Let me complete the question. Bank paid 100 lakh. So 100 lakh loan we have taken. Then on 28th Feb, the company drawn 20 lakh more and utilized it for renovating the office building. So what they have done, the loan, they have taken full amount, 120 lakh, but they used it for their office building. So is it correct? I mean, what will you do? So first I'll have to see whether Karo is applicable. Right? So this part till here, first 2 points talk about applicability of Karo. So Karo exempts a private company when private company if it is not a subsidiary of a holding or subsidiary of a public company. And 3 more things are there. Which are those 3 things? Paid up and reserves, right? Paid up capital and reserves is less than or equal to 1 crore. Yes, it is less than 1 crore here. It was some 80 lakh, correct? 80, 70, we have something. 50 lakh. Second condition was loans. Are loans less than 1 crore? No. 1.2 crores. So Karo is applicable. Turnover is given, but we don't even need that. So first point says clearly Karo is applicable. So Karo exempts private company not being a subsidiary or a holding of a public company with paid up reserves, paid up capital and reserves less than or equal to 1 crores, total borrowings less than or equal to 1 crore from bank or FI at any point of time, and which doesn't have a revenue of 10 crores and above. Okay. Or other words, they have revenue of less than 10 crores. So here paid up capital is within 50 lakh, within 1 crore, turnover is within 10 crores, but total borrowing is more than 1 crore, hence Karo is applicable. Simple. Now which point of Karo am I talking of? This is loans taken and utilized for other purpose. So then again, clause 9, para 3 of Karo, this is which? This is the clause of Karo which is applicable. Clause 9. Whatever loan has been taken, it was applied for the purpose it was taken. Terms and conditions you can see. So this 20 lakh has not been used for erecting the machine. Rather it is used for renovating that building. So report the fact under Karo. Okay. C Limited has defaulted in repaying the dues to a financial institution during the year 21-22. Defaulted in repaying the dues. So again we are talking about loans taken but not repaid. Okay. It remains outstanding in March. However, they settle the amount in April 22. So after year end, they have settled the amount before completing the audit report. Should you report this matter? So on 31st March, is the amount outstanding? Yes. Has the default occurred? Yes. So you have to mention that under Karo. But at the same time, you can also mention that before the audit report was signed or whatever, the amount was paid in April. But even if it was paid in April, it does not change the fact that it was a default in the month of March. So you need to consider that. Again, they have also mentioned about Schedule 3. The terms of repayment and all we need to disclose, seeing the period, amount of default we have to give. Clause 9 again of loans taken in Karo. If they have defaulted, we have to give the details, the period and amount of default. So in the given case, they have defaulted. They have settled it in April, but still it needs to be reported. So how will you report? You will mention that they have taken a loan at this rate from this bank or whatever. So many months it was outstanding and it was settled in April. Mention all that, but you have to mention. Okay. 23. What are the reporting requirements in audit report under Karo? Under Companies Act oblique Caro. Fraud has been committed against the company by a vendor of the company. So vendor, some seller of the company has committed a fraud, or the company has committed a major fraud on its customer and the case is pending in the court. So clearly this is covered by Caro under fraud point. You left F point. That is your point number 11. Exactly 11th point we took a, we took a break kind of thing. Okay. So 11 points and last 11th point there was fraud. So under fraud we have to report plus Companies Act they have asked. So when we talk about Companies Act again 143(12) will come. When we talk about a fraud SA 240 will come. All these references will be coming. Okay. So how will you report this? Clause 11 of Caro 2020. See whether fraud by the company or fraud on the company has been reported. Also you have to mention about 143(12). Under same Caro says that if under 143(12) ADT 4 reporting had to go to CG, whether it has gone. Right? And we know when does 143(12) tell us to go to CG? When the fraud amount is more than 1 crore or above, 1 crore and above. So the first one, fraud committed by the vendor. Yes, reporting has to be done in accordance with Caro 2020 and as per 143(12). If the fraud is less than 1 crore, remember we go to the audit committee to report. If you don't have audit committee, board of directors we report. And beyond 1 crore and above 1 crore, we go to central government. So we have to see that 143(12). SA 240 also we need to mention here. And similarly, if company has also done a fraud, same thing we will have to report as per the clause 11. So fraud relating, these are the points. Next one. 24. How would you report under Caro? Now see the difference, okay? This question specifically asks you how will you report under Caro. And the problem 23 which I had, that only asked me how would you report, it asked me under Companies Act oblique Caro. Both they are asked. But here they asked me only about Caro. So I will not need to mention about SA 240 or anything deals with fraud. So this is the difference in the question. The internal audit of the company has identified a fraud in the recruitment of employees by HR department, where certain amounts were alleged to have been taken as a kickback. What is kickback? It is like taking a commission from the employees. Okay. So HR department have appointed the employees. They have taken a kickback, means they have taken some commission, kind of referral commission from them. After due investigation, the HR manager was sacked. The amount of these kickbacks comes to about 12 lakh. 12 lakh rupees. So it is less than 1 crore. So 143(12) tells me to take it under where? Report it to audit committee or the board of directors. Correct? At the same time, I have to report in my audit report about it. But ADT 4, central government will not come in this. Okay, come on. Clause 11 again. Auditor is to report whether any fraud by the company or on the company has been noticed, give the amount, the nature of the fraud involved. Also, if 143(12), same fraud point tells me that 143(12) reporting, if to CG was required, had it been done in ADT 4. But here, the fraud has been identified. Amount of the fraud is 12 lakh. Auditor has to only report on the same. So it is not to be going to CG. I hope you understood. One more thing over here, we have not mentioned about SA 240 because question is only asking about Caro. And again, this is also fraud related. Report under Caro. ABC Private Limited is a manufacturer of jewelry. A senior employee of the company informed you that company does not disclose the purity of the gold used on the jewelry. Right? So they are not using, not writing the purity of the gold, means it 22 carat or 24 carat gold or whatever, 18 carat gold. They have not mentioned it on that jewelry. So is this a fraud? A normal question, if I ask you, is it a fraud? You will say, yes, it's a fraud. Right? Normally, any student thinks like this only. But then, this fraud, it is not a fraud which is affecting the financial statements. Understand that. I'm not writing in that jewelry does not change the jewelry's nature, amount, or anything of that sort. Okay. When I say fraud, it is fraud on or by the company, and it relates to the financial statements. By not mentioning purity of the gold, it is a fraud, but a fraud on the customers. It is like you're not telling the customers maybe, but it does not affect my FS normal basis. So this little dicey question, normally student thinks that yes, it is a fraud, it needs to be reported. See, there are so many malpractices a company might be doing in selling malpractices. Sales stock is there. What do you say? Some false commitments are given during sales. This is a very normal sales job. Now, as an auditor, I cannot say that every small customer you have gone to and you have done something, it is a fraud. Understand that. And secondly, I am not disclosing the purity. I did not say that company is giving impure gold. See, that we don't know. So that is exactly why this point, though apparently it looks like it is a fraud, we need to report, this will not come under Karo reporting. It's a little different question because normally 80% of the students here think we need to report. Okay. So, purity of the gold, if it is not properly disclosed, it can amount to defrauding customers. However, auditor is concerned with those fraudulent acts which cause misstatements in the FS. Got my point? So long as the books are not being affected by this, it has no implication on the audit, so it is not required to be reported under Karo. Therefore, no reporting is necessary, but I'm repeating. We have made that assumption that yes, it does not affect the books of accounts. Okay. How would you report under Karo? Long-term borrowings from the parent, the borrowings from parent, loans taken, has no agreed terms, neither the interest nor the principal has been repaid so far. So you have taken loans, but you have not repaid the amount, no proper terms and conditions are there. Default has happened, right? Plus you have taken it from the parent, from your holding company. So again, which point will be there? Loans taken. Loans taken is coming quite often in this. So we have got under loans taken. They have not mentioned that loans taken point. Only related party point is given. You can add this. Okay. Write down one more point over there. Pill, DCS, ULEF, right? So L point, 9th point. No, I'm just seeing the 9th point. It seems not given here. There's a reason. See, come to the 9th point. Where company has defaulted in repayment of loans. The period and amount of default. Now here why that amount is not taken here? Because they have not given any terms of payment. So if terms of payment only not given, there's no question of default. When the due date will come and we don't pay, then it is a default. If due date is only not given, then it will not be considered a default. You got the point? That's why this point is not given. So it's not wrong. Okay? No. Nothing will be repeated. Only under related parties. We have to still do that point. We will do it. So a good question here because normally we would think about loans taken, but that point will not be coming here. And I think that's it. Whatever points we could do, I think we have finished. Now we need to complete the other 10 points. So come back to our remaining 10 points. Now these are all small points, so don't worry. I know 21 points is a lot. So student gets tired by the end of it, but we don't have a choice. So PIL, DCS, ULEF is over. Now the next 10 points. I start with NRI. Yes, NRI. What is NRI? First point, N stands for Nidhi companies. Nidhi companies are mutual benefit companies which are working for the benefit of their members. Okay. So Nidhi companies, they have got their own rules. Nidhi companies have got separate things. So we have to see whether they have complied with NOF to deposit ratio of 1:20. So there's a net owned funds ratio. See, in your advance accounts, we have got NBFC chapter. And in audit, in our audit final, we have got NBFC chapter again. In audit final and advance accounts in inter. So there we have got this net owned funds calculation concept. So normally these Nidhi companies have to maintain a ratio of 1:20. So we have to see whether they have maintained that ratio. Okay. This point number 12 will only be applicable for Nidhi companies. So if your company is not a Nidhi company, you just have to write not applicable for this point. Okay. So one, that is there. Second thing you have to check here whether company is maintaining 10% unencumbered. Unencumbered means having no charge. Has or having no charge on those term deposits. See, if I have a term deposit like a fixed deposit, I take a loan against that. If I'm taking a loan against that, then there is encumbrance, means there is a charge on that. Okay, but we have to see whether they are maintaining at least 10% in unencumbered term deposits to meet out their liability. Okay, so they have to maintain that much term deposit. Also, whether they have defaulted in payment of interest, deposits, repayment, etc. If so, give the details. And this only applies to Nidhi companies. It's a very technical point. Hardly once in a while you'll get to do Nidhi company audit and this reporting will come. Okay, otherwise this point is not applicable for almost all the big companies which are there. Okay, then N, then comes R. What is R? Point number 13. Related parties. NRI, related parties. So what do we have? Whether there are transactions with related parties and whether then compliance with 177 and 188 of Companies Act. Not only that, they have been disclosed properly in the FS as per applicable accounting standards. Now, when I say applicable accounting standards, it could be AS 18 or Ind AS 24. So whatever related party transactions are there, whether they are properly done, complying with section 177, 188. So we have got this, audit committee section. There we have got other related party transactions 188 we have got. So we have to see and whether all disclosures as per AS 18 or Ind AS 24 are made. Simple. NRI. I is now internal audit. So we know that certain types of companies, they have to have the internal audit department. They should have the internal audit done. Section 138 tells you about that. Okay. So internal audit, we have to see if the company has a proper internal audit system which commensurate matches up with the size and nature of business. So I have this huge big business and in internal audit system, I've got 2 employees working. So it is not going to be enough. So it should commensurate, it should match with, it should be suitable for the size and nature as per the business. So we need to check that first. Do they have a proper internal audit system? And secondly, whatever reports are given of this internal auditors, did we consider them properly? What reports they had given, what recommendations, what problems they had noticed, did we consider that? That also we have to mention, whether the reports were considered by the stat auditor. Okay, so internal audit, now we have to take that also seriously because Caro requires that reporting. Their reports also we need to take seriously. Okay, so NRI, these are my points. After NRI, we have got NR again. NRI, Nrcr. 4 points we're going to see. Nrcr. What is this Nrcr? Again, N, non-cash transactions. Has company entered into non-cash transactions with the directors or the related persons? If so, have they complied with section 192 of the Companies Act? So you don't need to know detail 192. For law, you do it. For auditing, we just need to see whether they have complied with that. So any non-cash transactions, any kind of thing we have had transactions with these directors or connected persons, we have to see this. Clear? So NR, RBI registration. So this point applies for NBFCs. What does it say? Is the company required to be registered under 45I of the RBI Act? If so, whether registration is obtained. So NBFC, full chapter you have. There you see where it is required, how it is required. If you're in the principal business of financing, etc. But for me, I have to see, do you require to be registered with RBI? If yes, have you taken the the certificate of registration, COR? Have you taken that? We need to see. See, are they doing any business without a proper COR? That is certificate of registration. Is the company a CIC, which we call core investment company? Does it continue to fulfill the criteria? All these are technical things which we have in our NBFC chapter. Okay, but we as auditor have to see whether they have complied with these conditions. If there are number of CICs, that is core investment companies in the group, you have to give the number of how many core investment companies are there. Okay. So again, this point number 14 or point number 16 will only be there if you are a NBFC. Okay. So that Nidhi company or NBFC point does not come in every company. Okay. Nrcr. Now what is this C? This C is cash losses. Has the company made cash losses in this year and in the last year also? If so, give the amount of cash losses. So are you a loss-making company? Now, when I say loss-making company, we have to see cash losses for current year and the previous year. 2 years continuously are you making cash losses? Then auditor will report you as a loss-making company. Okay, you know, before Caro 16 came, before this there was Caro, earlier Caro, before Caro 16 we had, there also we had got this loss-making point. Then Caro 16 came and 16 points came in that, and they removed this point. Now again they have got it back in 20, Caro 20. Okay. Anyways, the point is cash losses. What are cash losses? See, we have got one loss which is shown in the P&L. But when we add back our depreciation, any non-cash expenses like provisions and all, after adding that also we are getting losses. Okay. Then in that case, it's like a clear cut, your actual loss making company. Sometimes what happens, you are making a 1 lakh profit. Just for example, you're making 1 lakh profit. You provide depreciation of 4 lakh. So 1 lakh profit, and after providing 4 lakh depreciation becomes a 3 lakh loss. But this 3 lakh loss is not a cash loss. You're understanding? Okay. So this is what I'm trying to say. It is a loss, but it is not a cash loss. Because this is after providing 4 lakh depreciation. So we need to add back those things. We need to consider that depreciation. And then after that, if there is a loss, then it is a loss making company. Cash losses. Are you clear? So current 2 years consistently are making losses, cash losses, we need to report it. Not just loss. Okay, it's cash loss. Be careful. Then Nrcr. One more R is there. This R deals with resignation of auditors. Special point on resignation of auditor. So if you are a new auditor who has come in place of a resigned auditor, Okay. Then during the year, has there been resignation of the statutory auditor during the year? If so, whether we, the new auditors, have taken into consideration the issues, objections, concerns raised by those outgoing or resigned auditors. So they have resigned, we know. Okay, but when you came in picture, did you consider his objections, his suggestions, his problems, what he had faced? Did you consider that? So this is a big responsibility on us. We can't just someone has resigned and suddenly I take it up. We have got extra responsibility in Karo also now. Okay, so Nrcr, these are my points. Okay, and the last 3 points now we call it GCC. GCC. So what are these points? We will see one by one. But before seeing these points, let us quickly revise all the points we have seen so far. The first P we had seen was PP, correct? PPE. Then we had got inventories. Then we had got loans, advances given. Then we got this L, loans under section 185, 186. D, deposits from public. Cost accounting records. Statutory dues. Same order. 7 over. This was your unrecorded income or undisclosed income. L we had got was loans taken. This comes quite often. Default in the loans, purpose of the loan, application, short-term use for long-term purpose, etc. E was end use of IPO or FPO and preferential allotment. F normally students never forget. Fraud. Correct? N boys don't forget many times. Nidhi companies. Then R we had got, this was related party transactions. So whatever related party have they done as per, Companies Act, as per AS. Then I, what was that I point? Internal audit. NRI. Okay. Then again we had got N. This was N relating to our, what was this? Non-cash transactions. Our RBI registration for NBFCs. C we had got was right now cash losses. Cash losses we have, and then we had got this resignation of our auditors. And now we come to the last few points. Last 3 points. Going concern. Let me just write it here. Going concern. This C, CSR. And this point relates to CFS, Consolidated FS. So I'll explain the 3 points, but just to get this. PIL, DCS, ULEF, NRI, Nrcr, GCC. I told you, it's a stupid, funny tech, I don't know what you call it. But the order is important, so you need to remember it in the same order. So let me see. Going concern point. GCC. So, my schedule 3 has got a lot of amendments now, and they say you have to give ratio analysis, you have to give aging analysis of receivables, trade payables, capital WIP, intangible assets under development. All these we have to give ratios, we have to give so many. So now, based on the analysis of these ratios, based on the analysis of the aging that they have given, okay, the dates of realization of assets, liabilities, etc., basically on whatever we have observed on the other information, do we as auditors believe, right? The auditors' knowledge of their plans, management plans, etc., are we of the opinion that there is any uncertainty regarding the company's capability of meeting their liabilities, which is payable within a period of 1 year from the balance sheet date? If I just go through this like this word by word, sometimes I get confused. What exactly are they trying to say? But if I know the meaning of going concern, I'm done. I'm sorted. We are trying to see, depending on the information that we have got during the audit, whether the company is capable of meeting their liability at least for a year from now. See, we have not seen the future. No one has seen the future. But if we can see that clearly company is having problems, they're not going to be able to meet even their short-term goals, then we have to report over here. Okay. So this is giving like an onus on the auditor. Right? We have to see in our observation if there's any uncertainty about their existence, whether they will be able to repay their dues. We have doubts. We have to mention it here. Okay, so this is my going concern doubt, which is actually, according to me, quite a big responsibility on the auditor. Okay, then CSR, corporate social responsibility. So, if there's any amount which is to be transferred, the unspent amount is to be transferred within 6 months. If we have to spend on CSR, but if we are not able to spend, then we have to transfer it to a fund within 6 months. Whether they have transferred that amount which is required to be transferred within 6 months, if not, give the details. Also, any amount which is unspent, right, pursuant to an ongoing project, whether it has been transferred to special account as per 135.6. Simple words may have they complied with section 135.5 and 135.6. If it does not relate to ongoing projects, then we transfer to a special fund account. And if it relates to a specific project which is going on, CSR related, then it needs to be transferred to that particular project. Have they done it? If not, report about it. This is how it is. CSR point. And last point, CFS point. Why this point is important? Because we said the entire Caro does not apply to consolidated FS reporting. CFS reporting, it doesn't apply. Except point number 21. See, in Caro, in this paragraph which we saw, where is it? Here. Paragraph 2. What did we say? This order shall not apply to report on CFS except clause 21. So only clause 21 will apply to audit of CFS. So what is this clause about? Let us see. Only this part applies, and we have to see CFS for this particular clause only. So in CFS, when we are doing audit of CFS, remember we have got consolidation we have done of our company plus subsidiaries, associate, joint ventures, right? Mainly subsidiaries, whatever reports we have received. Not necessarily I'm the auditor of the subsidiaries also, but I'm the auditor of the CFS. So subsidiary reports which have come to me by other auditors, if there was any adverse remark in those or qualification in that report, did we consider that in our reporting? Okay. So I am H Limited, holding company. I am the auditor of H Limited. I'm also the auditor of CFS of H Limited. And this H Limited has got subsidiary S1, S2, S3. So 3 subsidiaries reporting is there, S1, S2, S3. 3 different auditors, X, Y and Z. So their reports will be coming to us. Right? So whatever qualifications are there in their report or whatever adverse remarks are there in their report, whether we have considered that in our report. Okay, I'm not saying the whole report, only the adverse remarks or the qualifications which are there. That's all you have to see. So whether there has been any qualification or adverse remarks by respective auditors, in my example X, Y, Z, in the Caro reports of the companies, in the Caro report of the companies, not the entire report, only Caro reporting, 21 points of that S1, S2, S3, whether we have got that, and included in the CFS? If yes, indicate the details of the company's paragraph numbers of the Caro report containing those qualifications. So S1, S2, S3, their company auditors are going to report on Caro for that particular company. So in those 21 points, what they have reported, if they have any qualification, point number 9, suppose there's a fraud or something, there they have found out. Point number 11, fraud. So we have to mention that here. Got the point? So this is where CFS, that point will come. Otherwise, we are not bothered about CFS. Okay. So with this, all my 21 points are over. Last few points are comparatively self-explanatory. And now we come to our last few problems. Problem number 26. Long-term borrowings from parent. Remember, loan taken from parent. Parent, subsidiary, associate, joint venture, any kind of transaction with them will come under related party. And I already explained to you why this is not coming under the loan taken point. Okay. So as per clause 13, we have to report whether all transactions with related parties have complied with 177, 188 and also done and disclosed as per AS. Yes. So here also we need to report as per the same clause. 27. RTP question. Amount of 3.25 lakh per month is paid to VCare Associates, a partnership firm which is a related party. Based on the independent assessment, the consideration is higher by 2.25 lakh per month. While the transaction was accounted in the FS based on the amount paid, no separate disclosure is done as a related party. So I think it's pretty much clear. They have not done disclosures as per related party. So we have to mention that, right? So again, clause 13, Caro 20, 177, 188 compliance, applicable AS has been followed or not, we have to report. Here they have only said that the partnership firm is there. It is related party, and also that you are paying a little more than the normal market rate. It should be reported as per AS 18, India AS 24. So do all this. 28 is similar question. Related party only. So you can do it yourself. Nothing much in that. 29. So company is going to acquire assets for consideration other than cash. So it's a non-cash transaction with related party or connected person. See, he's the son of a director. So we had a point NRI, Nrcr. So first NRI was a Nidhi company, related party and internal audit. This is that N point. Which point? N, non-cash transaction, clause 15. Audit has to report about non-cash transactions, whether 192 has been complied with. So it deals with the restrictions on non-cash transactions. So here the transaction is done with Rahul, son of director. So yes, you need to report about it under this clause. Yeah. Abhimanyu Finance Limited is a NBFC, business of accepting public deposit, giving loans. Company was having NOF of 1.5 crores and was not having registration certificate from RBI. So they don't have RBI certificate. Normally, RBI certificate is required when you have a NOF of 2 crores plus. But they have applied for it on 30th March 22. 30th March 22, they have applied for the certificate. Company appointed as Mr. Cabra as the auditors, advised whether he needs to report on the same. So what does my Caro require? This is your point on registration with RBI, correct? Nrcr. So this is that R point. NR, right? So registration with RBI. They have only applied on 30th March. So 31st March, they are not registered. It will be coming later. So need to mention that in your report. Simple one. So NBFCs we have to mention as per clause 16 whether company is required to be registered under 45I of the RBI Act. Registration is required when you have principal business of financing. And when it is called principal business of financing, when company's financial assets are more than 50% of total assets and income is more than 50% of gross total income, of the gross income. All this is technical part you learn in NBFC chapter. I told you we are not getting into that. See, there are a lot of things, law related compliances, NBFC compliances. As auditors, we have to see Caro point. All those things you learn in your law and your accounts or whatever. See whether NOF is required as for NBFC. And what you have to report? You have to report whether registration is required, whether it has obtained, and if it not obtained, give the reasons. Like we already said, normally we need to have a 2 crore rupees limit for registration, but they have already applied for registration, right? They are not having the registration on 30th March, therefore auditor should report about the same. Okay. So 31st March, there is no registration. They have applied for it, means they are wanting the registration or they require it. That's the point we need to keep. Last question. Is Caro applicable to auditor of CFS? CFS? No, it's not applicable. Auditor of CFS, but clause number 21 is the exception. Order shall not apply to auditor's report on CFS except last clause 21 of para 3. So I hope this is done. So with this, my Caro is over. Like I said, you're going to get question on Caro for sure in the exam. Okay, it's an expected question. Normally these questions cover your module, your RTP, MTP, all questions are covered. So if anything comes, it will come from here. The most important clauses which normally come in your exams. Remember this. First one, PPE, favorite. Second favorite, loans given. Third favorite, loans taken. That purpose, application and all that. And fourth one, related party and fraud. Fifth one, fraud. Normally these 5 only come in the exam. These are the 5 ones you have to learn by heart. Okay. All others, okay. Statutory dues also comes. Yes, that is also quite often asked. Statutory dues. Okay. So with this, our Caro is over. If there are any questions, any problems in it, you can WhatsApp the question or you can just comment below. That's also fine. Okay. So wish you all the best and always keep smiling. Be happy.